morning. Welcome to IG's early morning call. It's Thursday, the 30th of November, the last trading day of the month as we look into the back end of this year. It's an interesting 15 minutes to come as we take a look at what's happening. European equity markets expected to rise at the start of today's session. We're poised to post a monthly gain after 3 straight months of losses for many of the major US and European indices. FTSE 100 is a little bit of an outsider. The dollar near a 3-month low. We're awaiting some important data out on both sides of the Atlantic today. We're just waiting on French GDP. We've got German jobs data coming out. We've seen some retail numbers coming through. We've got CPI data out in the Eurozone. There's inflation data out in the States with core PCE. There's a lot of economic indicators today. Some are peripheral, some are mainstream, some are just a refresher of what we've already seen. But we'll see what's happened today with that dollar move, euro dollar especially in the mix. And in amongst the other headlines to watch out for, it's all about oil. That postponed OPEC Plus meeting from last weekend. There's concerns that there's a little bit of a disagreement amongst the members of OPEC Plus, but they're said to be focusing on additional oil supply cuts to continue to try and support this dwindling market. Let's take a look at volatility, bouncing off what was essentially 5-year lows that we saw at the back end of last week. Yesterday was a positive day, but it's looking as though, once again, we are on the way down, indicating potentially a rise at the start of today's trade. Now, 3 days of losses on the London FTSE 100. I was talking there about this move that we've seen in the month of November. I want to show you where we are from the first trades in November. You can see down here at 73.26. We're at 74.39. So we are better off, but this is one of the underperforming markets across the European session. You can see here that German DAX, an absolute stormer of a month here. And in fact, in today's session, we've seen another new spike higher to levels now not seen since the 1st of August. So that has been an absolute wonderful place to have money, which is surprising, bearing in mind the problems that the German economy appears to be facing. French CAC 40, similarly, pretty good month overall. It's been a little bit of a hesitation recently, supported by the 200-day moving average. 72.78 is where we are. We're watching a potential break of the 73.07 level, then would take us up to levels not seen since the 20th of September. So you can see that as things stand there at the moment, that we are poised for gains across the European markets as things stand there. Let's take a look at what's been happening overnight in the Asia-Pacific markets. The Japanese Nikkei 225 closing with gains of 0.5%. Also a rise in what was a mixed session overall in the Hang Seng Stock Index. Again, on the trading day so far, we've still got a little bit of trade left there to go on the cash session. S&P ASX 200 ending the month with a gain of 0.75%. All those benefiting today and showing a positive month overall. And the Wall Street closed late yesterday as we look into the last trading day of the month. Gains yesterday for the Dow, but a little bit of weakness for the S&P 500. NASDAQ showing a little bit more weakness, but broadly speaking, it's the NASDAQ which has had a really good month. And in fact, this V pivot that Lee Sanford was talking about yesterday on Charting the Markets with me. He's a technical analyst. He was saying very strong. He is saying that there's a potential here for a little bit of a retracement coming through. Yesterday was a sort of shooting star candle that is a long upper wick, but we saw that trade there hit the highest level we've seen there since the 4th of January 2022. So we're looking there something like about 23 months almost, 23-month highs there for the NASDAQ. Performance on the Dow has not been quite so good, and we're looking as if we want to try and break this 35,690 level. At the moment, we are only at, I say only, we're at July 31st highs at the moment on the markets. A little bit of a hesitation as we await the start of today's cash session. But I think if we do get any further gains, this line of 35,690 expected to be broken. We've got around about 130 points before we get to that level. And then that would take us then back to levels not seen since the 10th of February 2022. So you can see the way things are moving. Just one item of news for the US that overnight you will have seen doubtless that the political world is mourning the passing of Henry Kissinger. A famous name going all the way back to Watergate and beyond, back to Vietnam. Henry Kissinger overnight sadly passing away at the age of 100. Now, let's take a look at what's been happening in other markets. Japan, especially the economy there. We've seen some economic data out overnight in Japan. The factory output rising for a second straight month in the month of October. Let's take a look at the figures as they broke overnight. Industrial production rising 1% in October month on month, following a 0.5% rise in the previous month. Economists had anticipated a rise of 0.8%. So that was better than had been expected. Retail sales looking strong, up 4.2% year on year in October. However, economists have been looking for an even stronger number of an acceleration to 5.9%. Didn't quite get that, but we have seen this strength in the Japanese yen maintained. This is the pullback in the dollar against the Japanese yen, and we are now seeing a little bit of a buyback here, supported by the 100-period moving average. But yesterday, we saw us print the highest for the yen since the, what was that, the 12th of September this year. A little bit of money going back in for the dollar against that weaker Japanese currency. So tipping out at the highs at 150, 195, and then this pullback that we've seen recently, which is just a retracement in what has otherwise been a very strong period for the dollar against that weaker Japanese yen. The big question is when the Japanese central bank is going to move on interest rates. We heard yesterday from one member of the Monetary Policy Committee in the Japanese Central Bank, the Bank of Japan, yesterday saying they weren't really ready to start tightening monetary policy into next year, as many had hoped over the New Year period it might have come through. But that's not going to happen, according to one BOJ member yesterday. Let's take a look at what's been happening, meanwhile, in the Chinese economy, where we've seen some manufacturing PMI data out overnight, contracting for a second month in the month of November. Let's take a look at those figures as the NBS manufacturing PMI coming in at 49.4, missing expectations of 49.7. Last month's survey unexpectedly fell in contraction to 49.5. Excuse me, factory PMI contracted for 7 out of the past 8 months, rising above the 50-point mark, pardon me, only in September. Services PMI falling to 50.2 in November from 50.6 last month, indicating activity in the vast service sector and construction continues to slow, which remains a worry for those monitoring what's happening in the Chinese economy. That being said, the Chinese currency has been benefiting from this weaker US dollar. And in the last couple of days, we've been flirting with this 200-day moving average. Yesterday, we saw the highest point for the Chinese yuan, the offshore yuan, the CNH, since the 16th of June. This is the dollar pulling back against that Chinese currency. Let's take a look at what's been happening and what is due to happen in the German economy today, because we've seen some retail sales data break just half an hour ago. Retail sales rising more than forecast in October by 1.1% month on month. The market had anticipated a 0.4% rise. Later this morning, 8:55 a.m. UK time to be precise, the unemployment rate in Germany is expected to be published. It's forecast to remain at 5.8%. Then at 10 o'clock this morning comes some possibly more important data in terms of the Eurozone especially, but also for what's happening with the European Central Bank. The consumer price index is out. Growth is forecast to slow to 2.7% from 2.9% in the prior month. And as it says here, it will be the 7th straight month of deceleration. Now, before I take a look at the foreign exchange markets, just want to quickly take a look as well at what else is happening, because there's a lot of economic data out today. I want to shift on to Canada, which is waiting the third quarter GDP number. Quarter on quarter, the consensus is for no growth at all for a second consecutive quarter. The pressure has been brought to bear on growth because of high interest rates continues to make a bite, and we are continuing to watch what's happening there with the markets. I want to move on, if I can, to take a look at what's happening in the US before I take a look at some of the crosses on the foreign exchange markets, because I want to catch up with what's going on in the States as well, because we've got some important PCE data out at 1:30 p.m. today, the Fed's inflation number. Price index expected to rise by 3.5% in October year on year after a 3.7% rise in the prior month. So that too is slowing. Now, according to Chris Versace from Tematica, the markets are once again anticipating too much in terms of potential rate cuts from the Fed.
The market is reacting to the comments from Fed Governor Waller that there could be a Fed pivot. But if you listen carefully to Waller's words, he says we need to see 3, 4, 5 more months of falling inflation. The risk is the market is once again ahead of itself.
Well, that's Chris Versace yesterday from Thematica telling the viewers yesterday that there was this idea that the Fed had expected to cut interest rates in May, but it looks like the markets have got a little bit ahead of themselves. In fact, I noticed actually that some of the market pricing is now anticipating 125 basis points of cuts next year, which to me sounds very toppy. Amongst other stats out today in the States, just a quick snapshot of where we are in terms of some of the other figures. Of course, it's a Thursday, so we get the initial jobless claims, the weekly numbers. Pending home sales as well coming out in the States, and that is also due at 1:30 today. Let's turn on to this chart here, the euro dollar chart, because I said I'd take a look at some of the crosses on the foreign exchange markets. As of the last couple of days, we've seen a break of this 61.8% retracement. We've now got a testing of that line at 109.60. We very briefly yesterday flirted with the 110 level before this pullback. This is a big area of resistance. Let me just quickly show you where we are. That high we had there was that was 110.95. The high is there, and you can see that we have seen some other areas down here. That's line of support down here. So between the 109.60 and the 110.95, there's a fair bit of resistance, which is where we are. So a lot of turbulence expected there. It's just a question of which direction it's going to break down in. You've got to break past this 76.4% retracement, and then I think you're then on the way up to the 112.76. But that's going to require a lot of heavy lifting for the euro against the US dollar. And I'm not completely convinced that that is the direction of travel, especially bearing in mind what Chris Versace was just saying about the potential for US rates could be held higher for longer. And that would seem more money going into the US dollar, which would mean this would be a reversal down here, back down to lower levels there to watch out for. How far down it goes depends really, but the total retracement of this, or rather the unwinding of this retracement, I should say, would take us down to 104.48. Now that's euro dollar. Let's take a look at what's happening with sterling dollar. Yesterday in the session, sterling was up there at intraday levels not seen since the 30th of August. Again, this is just a small retracement. I was talking last week to Patricia Elbez, a technical analyst, and she was saying into the first quarter of next year, she fully expects this market to rise to 130 with strength for sterling against the US dollar. Again, much of that is going to be dependent on what happens in terms of the move from the Fed. And then, of course, comes the other trade that we were talking about, the Canadian dollar. Looking for zero flat growth there today. This is the US dollar falling against the Canadian dollar. If we see a continuation of concerns about weakness for the Canadian economy, we see the Canadian dollar being sold, you'd be a buyer at 135.89 with a stop loss underneath this area down here at around about the 135 level. 135.89 is where we are, and you'd expect to punch higher if we saw further selling of the Canadian dollar around some concerns about the outlook for growth in that economy there. Now, let's turn on to what's happening with some of the corporates. I want to begin, first of all, with Dr. Martens. This is a company which is around about 60 years old now, but it's still doing good business. It's come out with first half numbers today. Let's take a look at the figures. Pre-tax profit was down by a whopping 55% on a drop in 5% of revenue. What's happening there? Well, the company says it reflects the EBITDA performance together with higher depreciation and amortization as a result of continued investment into IT projects and new stores as well. The concerns are that with debt, companies having to put more money into debt payments, revenue down, primarily driven by weakness in USA wholesale. And the company says, given the macroeconomic uncertainty, we are withdrawing our previous guidance of high single-digit revenue growth into fiscal year 2025. Now, this all, to me, looks like a potential sell of the stock. Now, look at this. In fact, I'll take this back a little bit further on because I want to show you what's been happening with the trade in this. I can't go back any further than that, but you can see the direction of travel since the highs we had at the beginning of this chart back in February 2021. And we've sunk again. And in fact, I want to draw this line down here to a line of support down here at 105. Let's take a look in some more detail about what's been happening in the last few days. 3 days of gains. As I say, I don't really like the look and shape of these numbers, I have to say. And I think potentially we do have some declines to come. These lower highs, I suspect, are going to continue. So I'd be a seller of the stock with a stop loss around about the 117 level. We're opening at 114. This 105 looks vulnerable to me. And then if you get a break of that, you're then on the way down to uncharted territory we've not seen in the last couple of years or so for Dr. Martens. So despite the fact that it is a unique brand, people buy it, they love it, they continue to hold on. But the problem is, if you look down the list of retail sales prices, they're expensive. And it then takes it into something which people will say, well, look, in the current circumstances, we just can't afford this sort of footwear. If you're going to buy something, you go to Sports Direct or something and buy something cheaper and something that will give you equal wear. It just hasn't got the cachet that a lot of Doc Martens fans know and love in the product. So I think the withdrawal of the previous guidance is potentially a concern for this stock. Staying on the stock charts, wanted to bring up a stock chart of Mitchells and Butlers. Bit of a different story. A lot of upside business has been seen for this stock recently, and indeed we've risen up to levels in the last week or so we've not seen in this stock since February 2022. Like-for-like sales growth in the full year numbers out this morning, up 9.1%, with record outperformance against the market, according to the numbers out this morning. Operating profit up 17.6% to 221 million. And the company also says, which I think is another positive potentially for the stock at the start today, is that cost headwinds are starting to abate. Now, the problem is with that is, despite the fact that inflation is beginning to come down in the business, because there's a lot of raw material costs, of course, go into what they do. They have to run the pubs at a heat, so they're having to pay for fuel to heat the pubs and the food and so forth and keep food warm. But the national living wage was increased 9.8%, extended to everybody over 2021 from April next year. pardon me, from April next year. But a reduction in the energy prices and slowing food inflation has helped a little bit. But the broad sweep is that they are having to pay more for wages, and that is going to be a little bit of a headwind. Interesting to see where this stock goes at the start. If you're long at 243, stock goes down here below the 240 level with a view to take it up possibly to 267 at some point, which would be the highs back on the 9th of Feb 2022. But I'm not so sure it's got that much impetus. We've seen a rise recently on anticipation of good news and an abatement of this inflation. And I'm wondering whether much of what the upside would be from the numbers out this morning already baked in to the share price, which of course already prices in future moves. Let me just take a look at what's happening at Dell Technologies. Due to report after the closing bell tonight, the street anticipates earnings at $46 per share on revenues of just over $23 billion. Dell stock has risen by more than 30% in the last 3 months. I won't share the stock price. It's not an all-session stock, but nonetheless could be interesting. But the rally has been triggered by better than expected earnings, revenue and forecast in its last quarterly report. Analysts see Dell benefiting from booming demand for artificial intelligence servers following the last set of numbers. Morgan Stanley said the group was emerging as an early generative AI winner. Investors will want to see further proof of that after the closing bell tonight. Now, in terms of oil prices, the Thanksgiving Day holiday last week contributed to a drop in fuel demand, reflecting the latest EIA data. Clearly, people weren't moving around the country as much as they would otherwise have had to or would otherwise have done. Crude oil stocks rising by 1.6 million barrels last week. Distillates up by 5.2 million barrels. Gasoline stocks down a touch. I want to show you what's happening with Brent. We've got that OPEC Plus meeting today. Will hold its virtual ministerial meeting today. And we've seen 3 days of gains for Brent. Brent is the OPEC benchmark. OPEC Plus currently pumps around 43 million barrels a day, or over 40% of global capacity. And there are many OPEC members that want to see that number cut. They already have supply cuts in place, about 5 million barrels of oil per day, or about 5% of global demand. If they do cut further, expect this price to rise. Let's take a look at where some of the headwinds could be, given where we are and what's been happening. Let me draw a fib on from this high here, just to give you an idea. It's potentially where the upside headwinds could be in terms of pricing. Let's get rid of some of these so we can make a little bit of a cleaner chart to understand what's going on. So without that on there, you can see that we're currently at 82.93. This 61.8% retracement is $4 above that line of where we are, 86.61. Now, that is easily achievable, I think, if we do get further cuts given to us by OPEC Plus today. But because we had the postponement of the meeting, pardon me, from last weekend, it's clear that the ministers of the different nations that make up OPEC Plus are very different in their views as to what they should be doing. A lot of these nations need the income, including Russia, of course. They need the income, and they are prepared to have more oil on the market to get the income coming through. But of course, the irony is, if they don't get if they do have the cuts, the price goes up and they get the income anyway. But they're not prepared to do it that way, and there is this disagreement amongst OPEC suppliers. Let me just quickly go on to gold. And yesterday we saw the highest print we've seen in gold. We've seen not since the 4th of May. But my projection, this pattern here, this move that we've seen, this channel projection would take us up to a price target of 2090 if we see a continuation of upside. I've been talking about this a while now and been bringing the stop loss up, pricing in the profiting, the gains that we've seen. And if we do get any further upside, bring your stop loss in. If we do get any further upside, it continues to be profit. You continue to bring a stop loss in and put the profit into the bag. Let me just go back to what's happening with the euro dollar again, because we have just seen some breaking news coming through from the French markets on the numbers coming through for consumer prices and gross domestic product. GDP, surprising on the downside, the French GDP number coming through a negative 0.1%. The consensus has been for a positive number of 0.1%. So that is a negative. Let me just bring up a look at what's been happening in the last 5-minute candles. So you can see there quite clearly this drop in the euro dollar with French GDP coming through a surprise negative number. Consumer prices in France coming through month on month, a drop of 0.3%. The consumer price index year on year now stands at 4.1%. The previous had been 4.5%. So, sorry, 3.8%. I beg your pardon. The previous had been 4.5%. So consumer prices are coming in. But I suspect this drop that we've seen in the euro is as a result of that far weaker than expected GDP number in the French economy. That's it. I'll put a video out on that, I think, a little bit later on this morning, talking about what's been happening in terms of Eurozone numbers. So watch out for that. I'll take a look into more analysis on the euro, not just against the US dollar, but also against sterling. Also, we'll be taking a look in some more detail about the pricing gold. I'll be issuing a video on that as well a little bit later on this morning. But in terms of the start of today's trade, looking for gains across the board on the European markets, despite that weaker than expected number in France. The fact the French market's looking a little bit weaker now, but nonetheless, gains in London, gains in Germany expected at the start of today's session. Watching out for Mitchells and Butlers and Dr. Martins at the start, at the top of the hour. We're back at 10:30 with Charting the Markets.